Good afternoon from OANDA Asia Pacific. This is the OANDA Markets Insights video, and I'm Jeff Halley. It's been a funny old week over the last 7 days. We had the FOMC last week, and they surprised everybody by bringing forward their rate hike expectation dot plots into 2023. That caused a bit of a mini taper tantrum in the markets as the street rapidly reassessed the pace of the rise of potential US interest rates. We saw Fed Governor Bullard out on Monday saying that the rates would have to rise by 2022. And then we saw Jerome Powell overnight in testimony in the Houses of Congress saying, no, don't worry, we're still on track and inflation is transitory. There's been a lot of noise in the markets over the last few days. And that has really been because of this uncertainty about the elephant in the room. If we look at the 10-year bond chart that's just popping up on the screen now, we can see that it's had a pretty volatile few sessions, but net, it's sitting in the middle of its range. And if we look at the Nasdaq on this chart, we can see that despite all the noise and worries about inflation potentially, or are we not having inflation, or is it transitory, or is it wage price spiral, sticky inflation, Nasdaq is basically closed at record highs. This is very interesting. So we've seen a lot of noise, but really not much reaction in equity markets and in the bond markets. And that tells us that this elephant in the room, inflation, is still undecided as a potential event going forward, shall we say. Is it transitory? Is it permanent? Is it sticky after being on holiday for 20 years? The honest answer is we just don't know. There's lots of very smart people, both even within the Fed and also prominent members of the financial community worldwide, who are on very opposite sides of this fence. And that tells me that this is going to be an issue that vexes the market for a while yet. We look at the euro though, first of all, we'll look at the US dollar index, Currency markets have actually risen on the expectations that rates might hike in the US, and they've actually stayed there. So this reaction across equity asset classes has not been an even one. If we look at the dollar index, we saw it gain 200 points nearly this week before correcting slightly, but it still looks on target to move higher towards 93. Similarly, if we look over at euro US dollar, we saw that it fell to 118.50 before recovering to 119.5. But we can see it's had quite a big chart break in the medium term perspective. And it actually, in my mind, still has the potential to drop further to 117. Remember that the world has been selling US dollars in anticipation of interest rates not moving anywhere in America for quite some time now. And thus being short, this squeeze could actually continue on short dollar positions for quite some time to come. And interestingly, when we look over in emerging markets, we look at towards dollar Asia, we pop up the US Indian rupee chart, we can see that actually the US has given back none of its gains whatsoever. Dollar INR has risen above 74 and it's still up there. If we take another example, US dollar Thai baht, we can see again, the chart shows no retreat at all by the US dollar. It is still sitting the dollar baht above 31.85, probably helped along by a very dovish central bank rate decision today. That tells me that there's still some residual nervousness about this transitory inflation or not, rates higher or not in the United States, still sitting around in the market. Gold also collapsed over $100 this week on that Fed news and the Bullard comments. Now, it could go either way from here, but for the rest of the week, for me, it looks like it's stuck between that support. You can see it's $1,760 and $1,800. I think the bias, though, still does look like it could go a bit lower yet to wash out all that speculative long positioning that's been accumulated over the last couple of months. So lots of noise, but not lots of substance. Things will get clearer with the non-farm payrolls at the end of next week. But I think for the rest of this week, it's a day trader's market. And if you're a medium to long-term investor, now would be a good time to be on the sidelines watching proceedings. Thanks very much for tuning in and have a great week ahead.